Hello, this is Jennifer Coles from the Federal Home Loan Bank of Boston, and this is the training related to the permanent rate buy-down product. Here is our disclaimer about the material. The information presented in these training materials is for general information only, and it's based on guidelines in effect at the time of the training. So now I'm going to give you an overview of the permanent rate buy-down. The permanent rate buy-down is a program that provides a lower interest rate and reduced P&I payment for borrowers whose income is up to 80% of area median income, as provided by the Federal Housing Finance Agency and based on data from the U.S. Department of Housing and Urban Development, otherwise known as HUD. The table is the same table used by Fannie Mae and Freddie Mac, and it can be found on the MPF website on the home screen under Quick Links. The interest rate for the borrower will be up to 2% below market rate. The Federal Home Loan Bank of Boston will offer one interest rate to price eligible loans at 102. This is subject to change based on market movement. The Federal Home Loan Bank of Boston is funding the difference between the 102 and the below market price through a voluntary board-approved allocation to support lower-income borrowers, those up to 80% of AMI. The loans must be funded on or before December 31st, 2024. Participation is limited to members who are approved participating financial institutions with an active master commitment in the MPF traditional products. If you're not currently a PFI, additional documentation and processing are required. Delivery commitments are mandatory. However, as previously announced in March 2024, the pair-off fees for any loan to a lower income borrower, again those up to 80% of AMI, will be refunded if the loan is unable to be delivered after a delivery commitment is executed. The property type must be a 1 to 4 family owner-occupied property. Condominiums or PUDs are acceptable. No second homes are allowed under this product. And loan purpose can be for purchase or refi. Please note that cash out refi is included. Refer to the MPF Traditional Selling Guide for guidelines around refinance transactions. Standard underwriting guidelines apply. You can use your AUS, which is DU or LPA, or you can manually underwrite loans. Follow the MPF Traditional Selling Guide. Since this is a permanent buy-down, the borrower is to be qualified at the below market rate. PFI should not charge any points to borrowers on the permanent rate buy-down product. Lastly, there is no need to mark the loan as a special product, affordable loan, or buy-down. The delivery commitment will use a new special product code. You'll see it here. It's the fixed 30-year permanent buy-down FHLB, and that will alert MPF that the loan is for the buy-down product. So how does it work? Let's review a scenario. In this case, we're looking at a note rate or a market rate of 7% that would price that loan at 102 down to 5%. So that's the borrower interest rate. The price for that is 94. So when we look at the delivery commitment price is going to be roughly -6. And you'll see some variance on that depending on the commitment term, and we'll go through that in a little bit. The permanent buy-down price is 2%, so that's the 102 price. The difference between the permanent buy-down price and the DC price is the 2% minus the -6%, which gets you to 8% or 8 points roughly on each loan that you sell. In this example, we're looking at a loan funding amount of $100,000, an interim interest of no dollars. The agent fee is equal to the loan amount times the DC price. So that's the $100,000 times the -6%, which gets us to a -$6,000. The net funding amount is defined as the loan amount minus the interim interest plus the agent fee. So in this case, that's $100,000 minus 0. And to that, we're going to add the -$6,000 for $94,000. The permanent rate buy down is equal to the loan amount times the permanent buy down difference. So that's $100,000 times 8% or $8,000. And now we'll get to the total proceeds to the PFI. That's defined as the net funding amount plus the permanent buy down amount. So here you have the $94,000 from up above plus the $8,000 from that middle bullet to get you to $102,000 or that 102 price. So how's the product structured? What you need to know. The Federal Home Loan Bank of Boston will post a single note rate for MPF traditional non-government products. So here you'll see a single note rate, in this case it's 5 1/8. And depending upon the commitment term, you'll see slight pricing differentials. But don't worry, the net price to the PFI will be 102 regardless of the commitment term chosen. So if you feel like you need to take a 60-day commitment, you're encouraged to do so. Please make sure you give yourself enough time to close a loan. DCs may be extended up to 30 calendar days. Extension fees will apply. Here's the most important part, and in the spirit of this program, this is really important. Income for this product is based on all income for all borrowers who must also be title holders. Maximum income is up to 80% of AMI. So this is an overlay to the MPF traditional selling guide. The permanent rate buy down product requires that all combined income for all persons on the title and the application be at or below 80% of AMI. All income includes verifiable income. It's important that you do not exclude income that would otherwise be eligible to be included based upon standard secondary market guidelines, even if it's not required for qualification. Refer to the MPF traditional selling guide for guidance on using income, for example, part-time income or variable income such as commission. We've also placed an FAQ document on the Federal Home Loan Bank of Boston's website. It includes scenarios to assist you, so please refer to that FAQ document prior to using this product. Full tax transcripts are required to validate the income used for underwriting. Loans not meeting the income requirements will be subject to repurchase. Those tax transcripts must be in the file prior to the loan funding date. Loans may be underwritten, again, using an automated underwriting system, such as Desktop Underwriter or Loan Prospect Advisor, or you're welcome to manually underwrite loans and use the manual underwriting guidelines from the selling guide. The valuation alternatives are acceptable to use. So if you get an appraisal waiver or one of the hybrid appraisal options, you're free to use that for this product. Please see MPF announcement 2024-41 for this product if you're using DU or LPA. And follow the MPF traditional selling guide for loan to value, total loan to value, conventional loan limits, credit score, property eligibility, and private mortgage insurance requirements. Now we're going to go over pricing. So when you get to the pricing screen, you're going to see a new product under MPF Traditional. It is the fixed 30-year permanent buy down FHLB, highlighted in the middle of the screen. You're also going to see that slight pricing differential between the varying commitment terms. We encourage you to use a delivery commitment term that gives you enough time to close the loan. Remember that your price is going to be 102 regardless of the number of days you take down that delivery commitment for. And the 2% price shown above may change subject to market movement. Rates are not expected to change. Here's the delivery commitment form. So when you select this sub-product code, you're going to see some new and different language underneath that sub-product. So it's going to again remind you that you are selling a loan into the permanent rate buy down product. Refer to that language after you enter the buy down product. Here again, you're going to see that 5% note rate. It's going to pop up on the screen. It's going to show you that discount of 6%, and it's going to show you the permanent buy down price. Once you've entered the delivery commitment, and while you're waiting to accept it, you have that same 60 seconds that you normally would. Again, we're going to show you that single note rate. We'll show you the discount and the permanent buy down price. You can accept or cancel the delivery commitment here, so please review the information carefully to ensure you've entered it correctly. Once you've accepted that delivery commitment, you're going to get the delivery commitment number just like you do today. Again, it's going to show you that single note rate price. Please note that there's no delivery commitment pricing range. We are only going to display one note rate. And when you request your funding, here's where you're going to see the permanent buy down amount prior to requesting the funding on the new loan. The loan funding process will follow the same process used today. There are no additional closing documents required. Please do not put the subsidy funds on the LE or the CD, as the funds are being distributed to the PFI and not to the borrower. There are no changes to the funding process. The funds will be deposited into the same account. That's your one that ends in 650 here at the Federal Home Loan Bank, and that's the same process that's used today. PFIs do not have to change anything related to post-closing and delivery steps. Remember, you're already going to have the tax transcripts in the file, and when the file is pulled for QC, you won't have to order them at that time. But it is important to note that if a repurchase is required, the buy down funds and the premium on the sale will be recaptured. The same will apply if a loan is paid off within 120 days of purchase. So here I'm going to just go over a summary and then walk you through some next steps. In summary, new master commitments will not be issued to participate in this program, and delivery commitments must be at the individual loan level. All adult owners must be on the application, the note, and hold title to the property. It's required that you include all income for all borrowers who are also on title. The income cannot exceed 80% of AMI. No third-party originations are allowed, and loans must originate and close in the name of the PFI. The product type will be the 30-year fixed only. Loans will be subject to MPF program's quality control process. Loans not meeting income requirements will be subject to repurchase. Order full tax transcripts to back up the income used for underwriting when you plan to deliver a loan into this product. And remember, those tax transcripts must be in the file when you request funding. Note rate and price will not change often. There is no interest rate tolerance on this. Only one note rate will be displayed, which is the interest rate you will give to the borrower. Check MPF or your PPE for pricing changes. Loan data delivery must be primary residence and have an origination source of retail. And last but not least, loans must be funded by MPF on or before December 31st, 2024. So for next steps, check the active master commitment summary report in eMPF to ensure that you have capacity to take down delivery commitments. If an amendment is needed, please contact Shanda Pepin so that an amendment to increase your master commitment can be prepared. Please review your current pipeline for qualifying borrowers up to 80% of AMI. Ensure that income from all borrowers who are or will be owners of the property is included in the underwriting analysis. And once eligible loans are identified, go into eMPF and take out a delivery commitment. Please take a separate delivery commitment for each loan. If you use a product and pricing engine, please contact your PPE vendor to ensure that the product is available to you. Most PPEs will show the market rate at the 102 price. For the first 45 days of the offering, PFIs are limited to 15 loans. This includes your outstanding delivery commitments and your funded loans. And of course, that's subject to subsidy availability. PFIs should take down a delivery commitment once they identify an eligible borrower. The Federal Home Loan Bank of Boston will guarantee subsidy funds for all unexpired delivery commitments. And at the end of the 45-day period, the cap will be reevaluated, again, subject to subsidy availability. So now the training is nearly complete. We're going to need for you to get your cell phone out and scan this QR code. This is going to be your attestation that you've completed the training. It is required before you can use the product. So one person from your institution should make sure that they, again, scan this QR code. What that's going to do is bring up an email, scroll all the way through the email to the bottom, and include your name, your institution name, and I believe your PFI number at the bottom of the attestation before clicking send. Thank you very much for attending the training. We're really excited about this product. You will find information on the Federal Home Loan Bank of Boston's website, and of course, you can retain this training deck for your records. Thank you very much.